It's hard to see what catalyst would trigger enough of a spurt to revisit 2010 highs on the NSE at this stage, with everyone seeming to be in holiday mode already. Come 2011 though, what in your books is set to be the catalyst for the Kenyan market? Are we looking at it being as simple a case as economic growth?
Thank you very much, Alishia. It's always a pleasure being here. Well, looking at 2010 specifically, we've seen a lot of activity in most of, basically across the board. And as we are crossing into the new year, I guess we should be hoping that some of the other sectors of the economy are also going to perform well. But right now, we've seen stellar performance in terms of the financial sector, and hopefully that should be able to carry on into the new year. And we should also hopefully be able to see a lot of activity in terms of tourism as well as agriculture, with the rains continuing as we are seeing currently at the moment. And hopefully we should be able to see some more progress. And there's a lot of anticipation that also in the political front we'll have a politically stable environment so that we can continue performing with the almost 5 to 6% growth.
Well, while that may be the case, we have at the same time Kenya's corporate bond market expected to come alive next year as companies rush to capitalize on relatively lower costs of raising funds from the capital market specifically. Just how much of a pull factor could this be in terms of shifting investors away from equities and towards that avenue?
Well, looking at it in terms of how the NSE has performed, especially this year, well, the excellent performance of the Nairobi Stock Exchange in terms of the equity front has also shifted a lot of equity, a lot of capital into that front. But hopefully, as we're coming into the new year, yes, there might be a bit of interest in the fixed income segment of the market, especially noting that as at now we are seeing most of the companies have already risen significantly, and we should not be expecting a lot of rise in terms of the equity front. And also looking at it in terms of the liquidity, the low interest rates and such might also create a bit of liquidity in terms of interest, in terms of the bond market, and hopefully some of the companies are going to come up with bond restructuring programs in terms of their balance sheets, and because of that, definitely we should expect a bit of activity in terms of the bond front.
Let's take a look at a few of the companies that have announced their intentions to enter the bond space. Kenol Kobil set to be lining up a 2.4 billion shilling bond offer next year. What's your view on the company, specifically in a context where we've had the Kenyan government now regulating the market prices?
Well, definitely, Kenol Kobil has been very good in terms of taking advantage of the capital markets. Recently, they had a medium-term note, and seeing them thinking about a corporate bond definitely would come in terms of seeing how they can be able to finance their expansion. As we've noted, most of this year, they have been really expanding into the region in terms of Africa in general, and basically because of that, that could be still an opportunity for them. Looking at it in terms of the current goings on in the petroleum industry, yes, the price caps might affect them, but hopefully it's still creating for them an opportunity in terms of a competitive front, in terms of taking advantage of volumes as well as going into the region, so they can be able to still take advantage of other regions that could still present an opportunity for them to increase their profitability base. Of
course, that in a context where we have seen many multinationals pulling out of the continent as well, creating a space, a bigger space for them to play in. In the meantime, CFC Stanbic Bank is planning on issuing a 2.5 billion shilling bond. Let's look at what exactly this company is raising capital for moving into next year.
Well, looking at CFC Stanbic in terms of their performance most of this year, there has been a desire for them to disintegrate their insurance wing, and because of that, I guess most likely what they're trying to do is to restructure their balance sheet in terms of strengthening their capital base, as well as looking at ensuring that they do not liquidate or dilute a lot of their shareholding. And because of that, they're looking at raising more capital from the bond market or debt market, and because of that, it's still presenting them with an opportunity, especially now that they are also seeming like taking advantage of the opportunities that are there in the market. We have been seeing them expanding. They are opening a few branches here and there, and also trying to see whether they can take advantage of the loans market in terms of either mortgage as well as asset financing.
Of course, there's just a couple of companies that have made clear their intentions to play in that space. To bear in mind, though, is that the vibrance from the corporate market is encouraged by the fact that we've had market interest rates currently sitting pretty low. What's your outlook on that front in terms of how long these low interest rates can be maintained in a context where we've got growth and optimism about growth prospects moving forward, and inflation ticking slightly higher as well?
Well, thank you very much. Well, looking at it in terms of the interest rates regime that you've been seeing, especially in the recent past, it has been a major factor that's been contributed a lot by the economic boom that we're seeing in the country as at now. There has also been a lot of interest in terms of foreign direct investments, which has also really boosted our economy, and also agriculture in terms of performance, especially in terms of the region. We're also seeing them doing very well, as well as tourism, and because of that, it's creating a lot of liquidity in the economy. And also, the central bank has been fairly active in terms of trying to stimulate growth in terms of reducing the interest rates and helping there to be a bit of liquidity in the market. And looking at it going forward, I think the situation is still looking very positive, and hopefully we'll see a lot of activity in terms of the corporate bond market, as well as equities in terms of how the economy performs. And as of now, I guess with the uncertainty of the political environment, we are hoping that come next year, things are still going to continue in the same steam.